under the goat, as you all know.
Get is let me just quickly fix my screen. Let me get it all ready for you guys. So first pair, hold on. I gotta fix this, bro. You know I'm a streamer these days and I've been streaming, my boy. Yes, sir. Alright, that looks good. Okay, let's jump straight into it, right? First pair that we'll be looking at is, well, my screen is still too big. Hold on. Hold on, bro. Alright, that's perfect. So the first pair that we'll be looking at is New Zealand against the Japanese yen, right? Um, if you guys follow us on Instagram at Manando the Goat Setups, this page. So if you guys follow us, you can see that we posted this about like a week ago. It was a very simple setup in my eyes. Not much has been drawn. It was a cool buy. Nothing crazy. Was still buying, so I'm just gonna explain this pair or this setup that I took. So I'm gonna erase everything and start from the top, right? So the first thing that we do is figure out our structure, right? So we're gonna focus on the current market, which is this part. This is what we're focused on, and you can scale back to factor in this high right here, which is kind of important. So I'm gonna draw that in. Okay, cool. So you can see this high is very important. Anyways, this is what we're focusing on nonetheless. So I'm gonna put that aside. So the first thing that you do is obviously figure out your lowest lows and your highest highs, which we got our high right there, and this is our low. So we're working within this channel, and this pair was very simple. I didn't really want to do much because you can see from this point to this point is an uptrend, and the market was still within this leg forming this correction. So that's what I was looking at. So what I did was, as you can see, the market moves in two phases, right? The market moves in an impulsive phase, corrective impulse, right? So the market always repeats itself. The strategy is to figure out the correction phase so you can trade the correction phase anticipating the impulse, right? So the correction happens, goes sideways, and then you wait for the impulse, right? So you want to trade the impulse. So that's what we're looking at right here. The first thing that we figured out was this massive correction. The market was going sideways for a while, giving us um, these touches right here. So I'm just gonna use the same tool. Let me just make it darker for you guys to actually see what's happening, right? So we had these three touches on our support of the correction. This whole thing is a correction, right? So we had three touches on our correction. Remember, first touch, second touch, and the third touch, that's where we have our highest probability. So we focus more on the third touch. So cool, let's look at the third touch. Just to point out the third touch, this is the third touch of our support, or you can use a trend line in this case, but yeah, whatever tool you prefer is cool. But okay, that's our support, and here we have our resistance, right? So now we have a cool structure where you can see the highs and the lows and the clear touches, right? So on the third touch, the price gave us a rejection to the upside. So this point, most of y'all could have traded this point, took a risk entry right there to the upside, right? And that's fine as long as you zoomed in and looked at what the price is, like how the price is behaving basically at the third touch. So you can see the bearish candlesticks, the further they got to the third touch, they lost momentum. They became small and smaller and smaller until we started getting the bullish candlesticks, right? So the bullish candlesticks, the way you can see that they have momentum is by using this type of uh, uh, chart, which is the Heikin Ashi chart, which is the one I'm currently using right now. So the advantage of this type of chart is you can see the momentum by the wicks. So at the bottom of the bullish candlesticks or the opening of the bullish candlesticks, the price had little wicks. So you can see we hardly have wicks, which signals a great momentum within that direction. Keep that in mind. So usually, if I were to enter at this point, the third touch, I would have waited for at least I would have went down to maybe 2 hour time frame and okay, cool. It's choppy. Then you can scale down further to the hourly time frame and maybe try to figure out some kind of pattern right there, right? So you can see the price was a bit corrective when it got to the third touch. Still the third touch. Let me just move this closer and minimize this. So you can see the price was very corrective, kind of created like a some kind of channel. And what I mean channel, I mean this this correction right here. So you can see it was going sideways, giving you this high right here and this high as well. At the bottom, gave you these lows, one, two, three, four lows. So when you saw the price, okay, the price is literally just going sideways. It's not breaking out. It's not going any further beyond the main support. So what you do from this point is you literally just wait. So you could have just waited for this breakout right here. And the thing is about breakouts, you need your breakout candlestick to be huge. Like it's massive, my boy. It's huge. You know that, okay, this is a real breakout. So you can see the first candlestick that broke out was very big, very convincing. There's nothing wrong with that candlestick. It had all the momentum in the world. Okay, the second candlestick was also massive. So you could have entered from this point. Let me get my. So you could have entered right there, and then you put your stop loss below the first candlestick that broke out, which was this one, right? So you can see from that point, the price never went below your your stop loss. It didn't hit it. It just went straight up with this kind of movement, but that's not a huge big deal breaker, so it's cool. Um, so that's what you could have had as your first entry from the third touch, basically, and scaled up all the way to the top, as you can see. Remember, third touch has the highest probability. See, if you just traded from this point right here, the second touch, you see the price bought, you could have capitalized, and then the price went back down, and it went below. If I zoom in, you can see the price went below your entry, man. Like that was like way below. So your stop losses could have been hit or triggered. So the third touch is always the best place to trade at, which is what we're looking at right now. Okay, cool. That would have been the first entry. So I'm just gonna leave it like that. So you can see from this impulse, let me get my drone tool. This huge impulse, the price give you this choppy correction. Others could have been nervous about this choppy movement, but all you have to do is keep your composure and figure out the touches or the support and the resistance of this correction. Okay, since you've done that, now you figure out which are the actual touches on your support. Because if we're buying, this is how it would look, right? We would have a buying momentum, an impulse to the upside, followed by a correction or continuation pattern, right? So we're at this point right here. So what we're looking for is about three touches, one, two, three touches, and enter at the third touch, right? To the upside. So that's in the case of a buy. So in the case of you selling the market, you would wait for an impulse to the downside, followed by a sweet correction like this to the downside, right? You enter the third touch just like that. So in this situation, you can see that it's an impulse to the upside followed by this correction. So in my experience, I'm gonna count this as the first touch, this is the second touch, and this is the third one. The reason being is cause okay, let me just zoom in. We're still in the hourly time frame, as you guys can see. The reason why I consider these certain touches as my actual touches to the trend line is you can see that candle itself got all the way to this touch. If I adjust my trend line, you can see that the candle itself touched the trend line. Yeah, the candlestick ended up here. This is just a wick, so I'm not gonna consider this as a touch. Same as, okay, those were the only ones. So here at the second touch, you can see the candlesticks and not the pin or the wick touched the trend line. The candlestick itself, the body of the candlestick touched the trend line, which for me it confirms okay that's an actual touch. It's not just a false touch like this one right here where the candlestick itself was way up between the channel, and then the wick is the one that touched the trend line. So this I'm gonna disregard it. I'm not even gonna pay attention to it. It's not the second touch in my opinion. So this is my second touch, and the third touch, yeah, it's not really strict because you can see the wicks itself didn't touch. I mean, the body of the candlesticks itself didn't touch, but after the second candlesticks, I can use this strategy where I put a horizontal line, which gives me more or less like a double bottom situation, right? So you can see if I use this double bottom setup, we have touches right there, right? So okay, cool. Personally, I would have waited for um, several candlesticks to form. I'm gonna tell you why I wouldn't have considered this touch, sorry, as my entry, right? The reason being is, let me just zoom in so you guys can really see what I'm talking about because this is very important because most traders don't really look at candlesticks itself. They just look at the structure, the pattern, and that's the end of it, which works for some people. But then if you want to be more certain about your setup, very you must be sure you don't want mistakes in case like you're growing a small account. If you blow the current account that you have, uh, like say you won't have money until the next month to deposit. So if you look at the candlesticks itself and see what they're telling you, you will have higher chances of succeeding. So in this case, let's move our arrow to this candlestick. So we're gonna focus um, on this candlestick that's pointed by this arrow. So the reason why I wouldn't have opened my trade right here like this, I wouldn't have say I would have opened right then. The reason why I didn't do this and I kept waiting is because this bearish candlestick is big. Right? This is big. It shows, to me, it shows momentum. Okay, the market didn't really, you know, change the direction. It's still kind of weird, very sketchy. So that's the reason why I ignored it. Because the candlestick, the last bearish candlestick was big as hell, bro. It's big. It's bigger than the following candlestick, which is a bullish one, and the third candlestick, which is still it's bullish, but then it's still smaller than this pair. I mean, this candlestick, which for me, when I enter, I need to see reversal candlesticks. This is not a reversal candlestick, in my opinion. So I would have waited. Okay, now we have this big bearish candlestick, right? Okay, cool. Don't panic. But then look at the next one. The next one is clearly a reversal can. It's like, bruh, if you Google reversal candlesticks, this is literally what you're gonna see. This one right here. So okay, cool. This is where I start to like dial in. Let me focus. Let me see what happens next, right? Okay, cool. What happened next is this small bullish candlestick, which is fine. But then look at the following one. Huge, massive, big, and it has no wick at the bottom, which shows me like, okay, this one has momentum, brother. This one is probably the one, right? Okay, cool. What I wait for is okay, the price to close, the candlestick to close, and open right after the close. So I would have sold. I mean, I would have bought the moment this one closes, right, and put my stop loss below this reversal candlestick right there, which is very far from my entry point, but then it's not a big deal because the reward is good. So we scale up, and as you can see, the price right after we opened, okay, it bought a little bit and then sold off, went below our entry, so we're in a loss. But then our stop loss saved us from getting tagged out. So from that point, you just continue scaling up. Let me just zoom out. And as you can see, the reward, I would have had my stop take profit right here at this previous high. So you can see the risk reward ratio is still good, even though our stop loss was a bit deep, but it's still something that you can work with. And this is literally the trade that I took. As you can see, I don't think I can zoom in, but like, okay, cool. We had, well, let me just try to do this. What am I doing, bruh? Okay, so you can see this is the correction that I was looking at, and we just bought up all the way in the 2 hour time frame. So that's what we are basically looking at, and the price is still up. The it still hasn't turned, but then we reached this. Let me just zoom out. We basically reached this previous high, which was our final take profit. And yeah, we can all exit this setup. If you guys did take the setup that we posted in the Instagram setup group, which is manando underscore the goat underscore setups, you guys should follow. We're almost reaching 10,000 followers, which is cool. So this was basically the first setup that I had. So let's quickly recap. You can see we had um, our highest points, which is this horizontal line right here, uh, pointing out our highest high, and we have our lowest low, our main support, and within we had this um, from the lowest low we had, let me get my drone tool, we had this impulse correction where we could have also capitalized from this correction, but we were not looking at the market at that point, and followed by an impulse, and this is the correction that we looked at and capitalized from, and now we have a nice impulse to the upside. So that is it with New Zealand dollar against the Japanese yen. Very simple trade, as you can see, not too many lines. If I go back to the setup right here, you can see literally all I have is this horizontal line showing my main support of my correction, where we have the 1 2 3 touches, and then we had lines. Sorry, please excuse me a bit, my nigga. I'll be right back with you. Alright, cool. Bro, I'm in Bloemfontein, bro. It's cold as yo. It's cold out here, bro. Like minus degrees type weathers, bro. It's like crazy. So, anyways, um, yeah, simple. Nothing much going on. Just very simple. Okay, now we can move on to what's the silver, right? So with silver, I literally just saw something very interesting. Once again, 4 hourly time frame. Don't wanna go to the daily because it's not really necessary. But then some people might really attack me for this, so I'm just gonna do it for you guys. But there's really nothing interesting in the daily time frame. As you can see, it's very choppy, so can't even make sense of that. So I'm just gonna scale down to the 4 hourly time frame and look at what I have. So with this one, current market, we had this ascending structure, which is cool in my opinion, because we have nice touches on our resistance. 1 2 3 touches, which kind of like makes it valid for me. So it makes it valid for me because 3 touches for me is like, hold on, what the hell? Gotta look good for y'all, bro. Gotta look good, dog. So, anyways, we have. Oh! Alright, cool. So we have. Let me just make sure it's still recording. Alright, cool. If I we have 3 touches, right, on our trend line, which is the resistance, right? We're not gonna focus on the support because remember when we trade um an impulse to the downside followed by a correction like this, right? We only focus on the resistance because that's where we're gonna base our trades off. We're gonna sell from the resistance to the downside. So that is the reason why we're not gonna focus on the support of the structure. The only thing that we're gonna use the support for is take profits, basically. So no need to focus on this trend line. So we already have 3 touches, right? So we're gonna jump straight to the third touch. And the first thing that you notice is we had a double top right here. Double top, which is cool. Right after the double top, if I zoom into the hourly time frame, you can see we had a nice impulse from the second leg of the double top, followed by this correction right here to the downside. So just like I told you, impulse, correction, impulse, correction, impulse, and so on. So this is what we're looking at right here, which is cool. Nothing hectic. And unfortunately, we missed all of that. So now I'm gonna show you what I saw at the current market, right? So this is the current price that I'm focused on right here. And if you can guess the phase this is in, it is a correction. Reason being is we had this huge impulse and now we have this correction impulse, right? So everything that I do is literally just a repetition from the hourly time frame, 4 hours, daily. It's just the same patterns that you're gonna see. Nothing new, nothing extra, just simple steps. So what I noticed about this corrective movement, so instead of just drawing trend lines like this, okay, cool, we have a support and fine, we have a resistance. Instead of doing this, because once again, this is literally like an end ice, so you need to be a step further ahead. So what you need to see is are things like patterns, like double tops, double bottoms, head and shoulders, inverse head and shoulders. So in this case, instead of drawing like our structure of the correction, we will figure, okay, cool. From this point to here, I noticed this inverse, not inverse, but an actual head and shoulders. As you can see, first shoulder, second shoulder, the middle is our head. And then you, for those who are really technical, you can just draw your, sorry, you can draw your, what do you call it? Your trend lines if you really want to get technical, but I'm gonna remove those just to make everything look clean and not very confusing. So you can see the shoulders are almost the same height or length or however you want to measure that, and basically you could have looked at the right shoulder and based your trade off that. So that's cool. Zoom into the 15-minute time frame to really see what's happening. Okay, so our pattern moved, but then this is our hold on. So this is the right shoulder, right? If I zoom in, you can see this is the right shoulder. So cool, I'm gonna go back to the 15-minute time frame. So as you can see, the price is just choppy. So at this point, the 15-minute time frame is not really helpful. Go back to the hourly time frame, and you could have literally opened your trade at any given point, right? To the downside, right? Okay, cool. Say that you wanted something like this. You wanted, let me just, from, let's say, this is a trend line. This is our third touch, right? So this is our third touch or our right shoulder. So you wanted the price to reject and give you a textbook correction so you can feel comfortable to enter to the downside now. As you can see, we did not have such. The price was just to the downside. So it made it a bit tricky, but then if you know, okay, cool, there's an inverse, I mean, this head and shoulders, it's literally, this whole thing is a correction as we had our impulse right there. This is a correction, which means it has to continue to the downside. So you could have entered your trade based off those facts alone without a nice flag or a nice correction right there from the second, I mean, the third or the right shoulder, right? You could have entered your trade based on just those facts alone. So if we go back to the 15-minute time frame along the trade to the downside, you can see that the price at least tried to give us this nice correction or flag or continuation. It tried, the market tried, guys. But then you might think, oh Lord, I'm already too late. Look at this huge impulse from the right shoulder. Might think, oh my God, I'm so late, bro. Like Yo, but for those who know, if you had seen this right after the whole saga that happened with the Head and Shoulders, you could have also like, yo, cool, I'm taking this sell, right? So you could have done that as well. Nothing big, but you can see that if you're using a big account, a nice lot size with just this little movement, bruh, you're good for the month. It's cool. You make your rent, um, and so on. So it's fine. You could have capitalized off that. So you can see with this pair alone, we had this as our first, I mean, the last setup, the current setup at the moment, right? You could have entered right there, or you could have entered right there, right? Let me just go back to the 2 hourly time frame. So you can see this is, you could have entered at the right shoulder of the Head and Shoulders, that being the middle trade, or you could have entered at this double top at our third touch of the main structure, right? You could have entered within that correction as well, just like that. So you can see it's never really too late when you miss your initial setup. You can always wait for the next setup as long as you know that the price moves in two phases, the impulse and the correction, which the correction is always a continuation or a reversal. So always keep that in mind. So you can see with just this pair alone, you had just the past week, or wait, this is literally the past month. So the past month you had three perfect setups for a sell with silver, which I would like to think it almost moved the same way as gold, but it's not really the same. So, but then it gives you some context, like okay, this is the direction. Quick, cool. It's going down right now, right? So that is basically the two pairs that we have, which are the first pair was a buy, second pair is a sell. So this shows, okay, cool, from the same strategy or from the same way of trading, you can apply it to a bullish market, you can also apply it to a bearish market. So that's cool. Let's move on to the next pair, which is the third one. Canadian dollar against the Swiss franc. So this one I've been looking at it for some time. I think I included this pair in my last video. Um, Let me just erase everything. Once again, I'm not gonna scale up to the daily time frame. I'm just gonna focus on the current market, which this is the current market, right? And you can see in the current market, the price was just going down. The price was just going down. Eh? You can see if I cross my trend line right there, the price was in a downtrend per se. So what I did first was, instead of just figuring out my lows and it's too much, but you don't really have to do all those things, dog. So what I did was figure out my structure of this downtrend, which is here we have our support and here we have our resistance, right? So I'm sorry if it looks crazy, but remember, in a situation of buying, you focus on your support because you want to base your trade off your support and buy. You don't want to look at the resistance and you're buying. It doesn't make sense. It genuinely doesn't make sense, right? So you can see the, the resistance is just, it almost looks like it's in the air, it's just there. So remember, we're only focusing on the support in terms of a buy. So, okay, cool. I have that cleared out. So if we really count the touches here, you can see that's the first one on the trend line. second one on the trend line. And here we have kind of like two touches, but in reality it's just one touch. And I'm going to explain why. Okay, cool. You can see we have three touches. We focus on the third touch, which is this one right here. So let's just zoom into the hourly time frame to really see what's happening. So the reason why I counted these two touches as one reason is the third touch always has high chances of giving you a double bottom or a double top, right? In this case, it's a double bottom. And how I would have anticipated this double bottom is I wouldn't in reality, no. I would have just, okay, this is, wait. Let me adjust my touches. Okay, fine, okay, the touch, yeah. Okay, now we're good. So usually how I, with this big structure, this is a very big structure. So usually I would hope for the market to get to the third touch in such a fashionable manner where it's like it gives you information. Like for what I mean, okay, let me just redraw this now. So we had this as our first touch, second touch, and then on the way to the third touch, I would like the market to get there correctively, right? Let's say this is. So what I mean is the price must give me, instead of just going straight down, it must give me some depth to work with. So I could do something like this, trap them. Oh, that is so ugly. Trap the market right there and anticipate a breakout and then buy, right? So I would really hope for the market to move like that on the way to the third touch. So as you can see with this one, it really didn't. The price just sold off straight to the third touch. And usually that's not a good idea because the price can just continue going to the downside as there was no depth. It was just a straight impulse to the third touch. So how the price corrects this, because it knows it can't just, the price usually can't just create a V like bah bah all the way up. That's really a rare case. It's a rare case. You would only see that with like indices, things like Nasdaq, US 30, gold, whatever, right? But when it comes to currencies, the price has to give you some depth. It has to give you some depth. So in this case, the depth that we were given is this clear double bottom, right? This is the depth that the price gave us. So you could have based your first entry from this point, right, to the upside. But I explained all of this in the previous video, so we're gonna scale up and look at what happened right here. So just look at this beautiful impulse followed by this correction. So remember, when there's an impulse and a correction, the best thing is to assume the price is gonna continue going up in this case, right? Because a correction is usually, it's either a continuation, which means the price is gonna continue where it is going right currently, or it's a reversal, which means in the case of reversal, right, I'm going to show you. Remember how what I explained, how the price could have gave us more depth. So that would have been a correction. So this is a correction for a reversal because the price is getting trapped and then it's gonna break out and then just change directions. So it's, in this case it would have been a reversal. The correction would have been a reversal. But in this case right here, it's a continuation. So a correction either means the price is continuing or the price is about to reverse. Because a correction is where you base your trades off. So you need to know whether this correction is a continuation or a reversal, right? Two. There can't be the third option. It's just two options, man. Like two fella, like, right? Okay, cool. Let's look at the sweet correction where we could have based our trade. So remember, in terms of a bullish correction, we focus more on the support. Yeah? So in this case, I'm gonna grab my trend line and just try to connect these touches. Even though they don't really connect, you can see where the touches are. So this is the first one, the second one, and the third one. After the third one, remember, you need to wait for reversal candlesticks. Most people don't care about candlesticks, but I really do. Okay, yeah. So this is what I was literally just explaining. Look at this. This is a correction. The price got to the third touch in a correction, which is good, bro. Which is good. So this is what I was just literally explaining. So you can see the price from this point going down was correcting, and then we had our breakout, and the price just changed direction and just went up. So this is what I was literally just explaining. You must, the price on your third touch, it must really give you depth. It must either give you some type of pattern, either a correction, head and shoulders, inverse head and shoulders, double top, double bottom. It must give you something at the third touch. So in this case, it gave us a correction, a reversal correction, which is basically one of the easiest things to catch, because in this correction, you don't really need to count how many touches you have, as long as you can figure out this is a correction, bruh, and it's on the third touch. So what you do is, when the correction meets this trend line right here, forming this third touch, you just buy. But say, okay, say you bought the, which would have been a textbook perfect trade. Like, it can't get any better than that. Okay, cool. Say that was your first trade, or say you're more of like a reserve trader. You don't really like trading, taking risk trades, right? So what you want, say you want the price to give you an impulse from the third touch and a correction, so you can ride that continuation. So we're gonna scale down to the 30-minute time frame. Okay, cool. So I want to show you something interesting. The price will like, I can't keep repeating it. The price will always move the same. Impulse correction. Impulse correction, right? So in this case, you can see we have an impulse correction, impulse, and so on, right? So say we didn't want to trade this point right here. We are waiting for a correction. So gladly we did have a correction, which was this point. When I draw my support, you can see we have three touches, which is really perfect. And then the resistance, we don't really need to draw anything on the top, because we're only focused on the support. In the case of, uh, sorry, in the case of a buy, I mean. So what I mean is, we have this as our first touch, second, and then third touch. Remember, third touch, highest probability. This is a very small correction, so you don't really need to check how the price got to the third touch. We already did that with this one, this major third touch right here. So at this point, we're just looking for reversals and then signs of momentum to the upside. So if we zoom in to the third touch, you can see the price gave you this big wick. Um, some say, okay, it's a reversal candlesticks, whatever. And then right after that reversal candlestick, we had a nice bullish candlestick, no wick at the bottom. Remember, with this uh, type of chart, which is Heikin Ashi from Japan, we wait for two. Um, We can actually go down to the 15-minute time frame just for more, just for more detail. Where is the, bro? Like, oh my God, where is the chart? Okay, cool, bro. What's okay, cool. So we're in the 15-minute time frame. Just for more detail, we're at the third touch. Say, okay, cool. The first bullish candlestick had zero momentum, as you can see, we had wicks both ends, and the third one was just straight up momentum. It's basically the biggest candlestick from this point, which validates, okay, cool. These two bullish candlesticks are like, proper, which means we can enter right at the close of the second one, put our stop loss at the lowest low of the wick, which is right here. So it might seem a bit far, but the reward, guys, the reward. So scale up, scale up, scale up, scale up, scale up, scale up, right? And as you can see, as the price bought with this crazy, crazy wick, we're in a loss, but then it never reached our stop loss, which is good. So could have just waited that out. And then if we zoom out, you can see the reward is just colossal, my boy. It's like, oh, 2%. Yo, it was just buying. Okay, let me just adjust. So you can see the price just bought and bought and bought and bought. So, but right now it's in a correction, but this was the setup that we were looking for. If I scale back to the 4 hourly time frame just to see everything clearly, you can see right there. Yo, there's so many. Let me just try to delete some of these, bro. So you can see that the price just bought from this correction, giving us a huge impulse. Remember, first entry or final, not first entry, I mean final take profit, previous high, which is this point, zip across. You can see the price is actually, oh, I thought it was raining. So you can see the price is just respecting this uh, high or resistance or what do those CMC traders say? Block what? That's crazy. No, no disrespect. I don't want no smoke. We're all good, bro. I don't care what kind of trading strategy you use, but yeah, I just had to get my quick joke in, so it's cool. Yeah, so this is take profit. As you can see, 2.5%, which is massive. Like, how many pips is that, bro? Like, almost 4,000 pips is just insane, right? So this is the setup with Canadian dollar against Swiss franc, how it's been the past week or month or whatever, right? Since month end May basically. So now it's almost month end June, so it's been buying and yeah, it's a good setup, very simple, just descending structure, breakouts, uh, given that you have an impulse followed by a correction, which is a continuation in this case to continue to the upside, which is good, fresh, nothing hectic. Um, we bought at the correction, anticipated this nice impulse, which is 2.5%, which translates to almost 4,000 pips, which is, great. It's good. You make your rent, you pay for your expenses, and you still have pocket change to play with. You're good, bro. You just live your life, a very simple life, no pressure, nothing. Just from this one trade, like, you know, nothing complicated, bro. You don't have to trade 10 times a week. You just need that one solid setup that will push you and it will like literally make up for those 10 trades with just one trade. So less risk, you're not risking a lot, you're not trading a lot, you're not going under so much pressure. Like, okay, I need to reach my targets, I need to. It's just one setup, which is just all you need, really. So, um, yeah, this is it. I don't think I'm gonna analyze the last two charts, but for those who are interested, this is the setup basically. Very simple, just a descending structure. It's literally almost the same as this one, as you can see. If descending, impulse, breakout, and so on, right? It's the same thing. So I don't really want to tap in and analyze it. Impulse, I mean, descending structure, impulse, double bottom, as you can see, impulse to the downside, and now we're just waiting for the price to give us a correction to the upside. So it's literally the same thing. I don't want to waste you guys' time. So that's it with AUDCHF, and then the last pair is more or less the same, but then this is more of like a flat correction. This whole movement is a correction. Remember, it's like the same concept. So it's one, two, three touches on our support, and then the third touch, we had, the price gave us some depth by giving us this structure to the third touch. So the price got to the third touch correctively, which is what I was explaining correctively, and then it's still the same thing because you can see this correction itself has three touches, right? One, two, three touches. Main one has one, two, three touches. So it all comes together, making this nice masterpiece. So after the third touch, we had an impulse to the upside, which I traded, and then we had this weird correction, which I didn't trade, but I did analyze to the upside, which is still cool, nothing fancy. And then currently, you can see the price is giving us this nice correction, which might mean one thing or two things. A correction, right? In this case, it could mean a continuation to the upside. So it might mean that, okay, fine, first touch, second touch, third touch, we draw it out like this, we buy at that point. So that's what we are, you know, technically waiting for with this one, because the highest height of this pair is this point right here. So you can see we haven't reached what, maybe halfway. So it's cool. There's still opportunities with this setup. Um, but yeah, that is it for today. Hope you like this video. Make sure you subscribe. Just keep watching our videos, dog. Like, just keep watching our videos. There's so much to learn, and we really simplify it, which makes it very easy for you guys to learn and grasp and probably remember. Because most people just watch a YouTube video and they just forget like what they watched. So this is very simple. It's just that's why I keep trying to repeat myself so you guys can really remember. So that is it. Um, wait till the next video break, bro. Thank you for watching this. It's cool. So I'm just gonna wait for like 7 more seconds just to hit the 1 hour mark because I wanna post a 1 hour video on my YouTube channel, big bro. Okay, cool.